let them hit TP right at the top. It was at it was 4 hour. It was right here at 21,550.
Yeah, probably around here at these previous highs. Solid area for sure. That's a about 200 point move like that. No complaints there.
Yeah,
Super.
I'm definitely grateful because that made me definitely hit my profit target. So
Oh yeah, yeah, I like that. That's good. That's good, man. I mean, it's just been playing out pretty solidly. There's no complaints. I know this monthly candle closes here in the next 2 days. As long as we stay above 21,250, I have faith that price can continue. The reason why is because 21,250, that's a previous monthly high. That's a significant level. Same thing back here. We close above 20,800, which was a previous all-time high. We closed above, and then as you see, these past 2 months, we've been able to maintain and close above this level, which means like this is the new monthly floor. And then if we close above here in the next 2 days, this will be the new floor for the month. Unless we break below with a full body candle, we see that we tried to here, we came down here, never closed below. And then even this month's candle, we swept the liquidity from last month's lows. So anyone who got in last month and had their stop loss at whichever accumulation started this whole move, they were liquidated. Price came lower, tapping into some other imbalances and order blocks and inefficiencies, and now it's working its way back up. So we'll see what happens this month, and then eventually I want to see us close above these all-time highs, full body candle, and just continue the move. So far, again, on the monthly time frame, there's no inefficiencies that I see unless we're going all the way back down here to these levels. There's some imbalances left over here, things of that nature. There's also some imbalances even lower, but with all this structure like holding pretty well, I doubt that we'll come back to these levels unless there's something else that I'm missing. But so far, it's healthy price action, right? This is what you want to see in the market. You want to see healthy price action, and that's exactly what we're getting on the monthly and on the weekly as well. It's pretty healthy, no imbalances or anything like that. We did mitigate this order block a few times though, right? This order block was tested many times, right? These lows were tested. You can even have marked up these highs as counts as breaking structure, right? We broke structure to the upside here, and as you see, price was respecting this level for the most part. Even though we closed below the next candle, we closed right back in there. So when that happens, when one candle closes and validates, and then the very next candle gets right back in there, that also counts as a fake out or a wick as well. You could have even marked up these highs here. We closed above these highs, and you see price respected this structure very well. We didn't close below this at all. And then if you want to take it a step further, if this low was your stop loss, still no violations. Yeah, we swept some liquidity, but we never actually invalidated these lows here. We never closed beneath any previous weekly lows. Right, as you see here, we're only closing above the highs. We're not closing beneath any lows. So that lets us know that we are in a bullish environment, because for an uptrend to occur, you have to close above previous highs. That's how you make the higher highs and higher lows. And that's essentially what's been happening here. It doesn't look as basic as this. It's never going to look like that. But as you see, we are closing above highs over and over and over. We're not really closing beneath lows. Going down to the daily, we see right in here as well. Let me go back to the weekly real quick. Where is this originating from? Yeah, I know this level also appears on the weekly, so let me just fix that. Yeah, that's a weekly break of structure. That's the main area that we've been trading this entire time. We've been really mainly looking at this weekly structure here right before we broke the previous all-time highs. We close above these highs right in here, as we see with this candle, retested multiple times. It did its thing, right? We actually had the accumulation play out over several days. We had all this liquidity. I'm using this wick here connecting to this high, so just keep that in mind. Boom, we got the liquidity. We swept, right? We swept it right here. This candle, this push down, swept these lows. We didn't sweep these lows, we swept these lows here. Okay, and then price used that liquidity that was gathered here over the course of, this is probably like a week and a half, 2 weeks of money. We broke above, full body candle, confirming bullishness, right? Higher high, higher low. Right, that's an uptrend. And we came back, we gave the discount. We gave the discount pretty solid, 50%, blue line right in there, filled in some imbalance, made the market efficient. It was inefficient. Okay, we never got the full break and retest of the structure. We know once price comes back and retest a structure, that makes the candle balanced. That makes the candle efficient. It did its best. Doesn't always have to retest perfectly. It can always, just fill the imbalance and keep going. So that's what happened. And as we see, we've been capturing these buys. Every time price comes back to this level, we are buying. Right? The stop loss for this setup is all the way down here. Right? So you have to be able to keep that in mind. Like, let's say this is your entry and you're trying to get in a position. Stop loss is, 800 points. Can you handle that? Are you prepared to allow price to move that much for your trade to play out? Even if we take it to the highs, essentially a 1 to 2, right? But of course, this is a position that we're planning that's going to break all-time highs and continue the move. So I'm willing to, take these trades and hold this as a position that can allow price to continue to move in that direction. Unless we see any type of change of character to the downside, we would have to see price violate the structure. We'd have to see something like this, boom, and we have to break below these lows, 20,000, full body candle break. And then I'd look for, just to confirm, some distribution that we actually are selling. And this wasn't just a sweep or a fake out to then take that market and go lower, maybe to attack some other liquidity. But until I see something like that, we are still in this environment here. I do have some concerns about this gap. You never know what can happen here. Never know. So I highly recommend, once we do get here, partial out, take some off the table, close I'm personally going to close like 80% of all positions at this level just to secure some positions, because we never know. Once price sweeps any type of liquidity, whether it's a high or a low, there is a chance for price to reverse. So it's always a good time to take some profits there. All right, it's always a good time to do that. And once we do get in there, and let's say, for instance, price starts to give us some accumulation, then we can look to continue these trades. We can look to continue to take some of these buys. As long as we see some type of accumulation, we keep seeing lows being swept and then highs getting broken above with full body candles. As long as we keep seeing something like this play out, then yes, I will have faith to hold the buys. But if we start seeing some distribution, then I'm like, okay, maybe price wants to come lower, give us another type of entry somewhere. But all we can do is wait. We don't know what's going to happen. Once we get in here, we're going to watch price action and see exactly what's going on together as a group. If you look at the hour time frame, you see that we are still breaking more structure. You can use these highs. You can use these highs. Any highs that get broken above just confirms more bullishness This was the entry from today. If you were on the call, New York session, FOMC as well. We actually set this up yesterday. We had this play out cleanly. We had the liquidity being built up. Any one of these lows, right? This wick to this wick here, that's the liquidity. We swept a few wicks right in there, and then we did break above these highs. Full body candle. We came back for the retest. Easy play. And then price came right back down during FOMC. Gave another entry. Same thing. Took off. And it actually gave you 3 opportunities. Right now, this is the hour time frame. You had 3 hours to enter this trade. The first time price came into the zone, we swept this liquidity. This would have been, besides entering at the structure, the next buy limit you would have been here at the liquidity sweep. We swept the lows, got you right into there, tapping into the imbalance, right? The reason why it's imbalanced is because we broke above these highs. Imbalance candle. We never came back down here for this retest. So this is also an option. And if we do retest the structure, that will make this imbalance now balanced, right? So first entry at the structure, second entry at the liquidity sweep, and then any other entries are going to be here at this structure retest, or if you see some type of accumulation on the 1 minute, 5 minute, 15 minute, that gives you another confirmation. If you see that again, take that too. If you see that set up within your structure around these liquidity sweeps, take that. That's confirmation. That's evidence you need to enter the market. And again, we're breaking structure here, breaking more structure here. We just broke this as well, and we broke it with imbalance. Anytime you break structure with imbalance, that's how you know you're in a good position to continue that move. That just shows extreme force and power. Like, yes, it's broken for sure. The next highs we're gonna look at is this, but it looks good. You can even mark up these highs just to keep getting that visual representation of an uptrend, right? We are still breaking more structure, and this even in itself is accumulation. This is building up over and over and over. Let me take this off so you can see it. Price was moving up, right? This is also accumulation. Price is move because price cannot move up without doing this first. Like, price cannot go up. I've never seen price move up without doing something like this. Boom, retest gone. I've never seen price move without doing this first. Like, this always has to happen first. Always. And this is exactly what's happening here. Even if you had the premium trading view, you go to like the 30-second or the 5-second chart, it looks more clear. But here, you can definitely see how we had this liquidity being built up, and then we swept. I would consider this the sweep here. This wick, we swept these lows, or even these lows there. You can use either one. And then we did break structure here, these highs, right? So price was building up. Boom. These are the lowest lows. That's the first high available. And we swept. And then we tried to close above a few times, 3 times. Couldn't make it. Came lower again. Still respecting this area, even though we haven't gotten the full body yet. And then we do full body close. We come back for the retest and then takes off. Right? If you wanted to get technical, you could have had entries at the structure like we always do, and then see how this is an imbalance candle. We never got the retest. Right? This wick never came down to retest structure, but because it didn't, now it left in balance. Right? But that's super like nitpicky, but that's just to show you how it just repeats itself over and over. And then if you miss that, there was also, opportunities in here, broke above some highs right in there. You could have entered here, multiple opportunities. You could have even used these highs down here. You broke above. Super sniper. Super sniper, right? We swept these lows from this previous wick, broke above these highs or these highs, either one works. And then you had multiple entries. Imbalance candle, massive move. We came back to fill the imbalance, which means we retested the structure. This is no longer imbalance, it's now healthy price action. And then price moves. Even gives you another one. This is nasty work. Gives you all this liquidity. Boom, a low, the high, sweep, break structure above, and then came back for that retest. Gone. All right, you could have used these highs here. This is also your entry. We swept the lows right here. Boom. Or even the one right next to it, doesn't matter. Just look at the structure. Look, we broke structure here, retest multiple times. Right, if that wasn't enough evidence, we broke this structure here. Boom. Came back, more retests. It's just doing its thing. And then even this. What is this? Low, high, sweep, break above. Look at this retest. Perfectly. Boom. Gone. And then once we hit the highs, people like to take profits. It hits the high, you TP, boom, and then you see prices reversing. You maybe close out half of the position, 90%, 80%, whatever your trading plan is. But you see how all that's just on the 1 minute chart. That's just all within the 1 minute. So you got to do this starting on the higher time frames, the highest one possible. You're on the monthly chart first. You're breaking it down, looking at structure. Where's the accumulation? Where did price first initiate the move? You know, that's also supply and demand, right? Supply and demand and accumulation, distribution is essentially the same thing. Literally. Trading is essentially the same thing, it's explained differently, but I know the most important thing in trading when it comes to technical analysis is literally the structure. Literally, like the market can't exist without structure. Right? There has to be some type of structure to it. But I know, including myself, when I first was learning how to trade, I kept hearing, "Oh, break and retest. That's retail or this or that strategy, this strategy." I'm just like, but then after you study all of them, and you see how it actually works, and you understand why, and it's like, bro, this is literally the same thing. You know, we got all these new terms and, you know, it's just so many new things, but I just like to keep it simple, man. Nothing too crazy. Just keep it simple. Again, we have this gap right in here, just waiting. Very curious to see US 30. Nasty work. Easy play. Easy play. Same thing. We had this liquidity. You can use all these lows count really, but that's technically the liquidity, and we swept a huge sweep. Break above. Retest, and then retest. Again, once you break structure, that confirms the accumulation. It marks the end of the accumulation, right? It marks the completion of the accumulation. It accumulated, and then we broke structure. Now your setup is ready to go. And we see here that we never actually got a discount, right? These were the highs initially. Right, price did its thing, came up here, and it retraced, but it never gave us the discount retracement, right? And it just respected the structure at the top. All right, so keep that in mind. Sometimes price may not give you the discount, but who knows? This is not over. Like the fat lady, it's not over till the fat lady sings. Price can easily come back in here and give the discount. We don't know. All we can do is watch what happens here. Are we getting more signs of accumulation happening with current price action, or are we getting more signs of distribution? You know, yes, we are breaking some lows, letting us know that price, you know, wants to go lower, allegedly, But as we see, as price goes lower, we're not actually closing beneath any of these previous candle lows. Price is just coming down with the wicks sweeping liquidity, but we're not actually violating any of these lows. So the sellers here, based off the structure, they're not able to push the market below previous lows. So who's actually in control? If the sellers are in control, they're able to close the market, push the market, and close with full body candles beneath previous lows. They got these lows. What about these lows? Right, we need to see some true distribution, like boom, boom, close beneath these lows would be a nice confirmation to then take some sells lower. Maybe into some of these zones to fill these imbalances, or maybe this whole setup needs to get cooked and then go lower and attack some even lower areas, maybe down there. There's other setups. We don't know. Even if you draw the fib from this whole move up, right, from these lows to the highs, definitely are not in the discount. This is all premium buys. Premium buys, we are also near previous all-time highs. So keep in mind, we are buying in a premium area, right? So if anytime you buy in a premium area, there's a higher risk, right? And if you look at the Fibonacci for the sells, we're actually in the 786, 886 zone for the sells. But like I said, if you're in a sell zone and I see accumulation in a sell zone, I'm not selling. I don't care. I know they say look left to get right, which is true. You definitely want to do that. But if I approach a zone that we're supposed to be selling at and I don't see distribution and I see obvious accumulation, I'm not going to sell because there's no evidence. There's no evidence. It isn't like you have to have the evidence. And if this gets clapped, if price says, hey, I know you have accumulation, but we don't care. Yeah, so you have the accumulation. We don't care. We still want to close below. That's fine. This accumulation can turn into distribution because then we close beneath these lows. Price comes back up and then we start selling. Perhaps. That can also happen. We never know. It can sell off and come into the discount zone, which would be lower for the buys. Right, for the buys again from these lows. Maybe it wants to sell off and come to the discount. I'm not one to predict where price wants to go. Right, I'm not too good at that. All I can really do is look at what is the structure telling me. I feel like that's the most non-biased way of looking at the market. Like, I'm not trying to be biased. I'm not trying to be this or that. If I see accumulation and we are in an uptrend overall, then it means buy. If we're in an uptrend and I see distribution, me personally, I'm just going to ignore that distribution, allow price to distribute to lower zones of accumulation and keep accumulating orders if we are in an overall uptrend. Because as the market is doing its thing, you are going to see, distribution. You are going to see price give you the distribution. But I'm not going to take it because since we are moving in this direction, price can easily sweep any previous low at any time in reverse. We don't know what liquidity it's hunting for. So personally, I'm just going to allow that thing to drop, wait for the next accumulation, boom, and take that. And then on that retest, I'm setting buy limits, and boom. And if that gets cooked and clapped and it comes lower, fine. There's more areas. Wait for the next one, boom, and take that. And then you break above these highs, confirm, give another accumulation, boom, I'm taking that. Right? And then sometimes the trend line needs to get swept as well. The trend line is also liquidity. The same way we have highs and lows that get swept and then reversed, the same thing happens on trend lines. Same exact thing. So I definitely don't mind taking, these kind of trades. Definitely don't mind. So that's essentially what we have for indices. SPX, very similar. We have this gap right in there. So we'll see what's happening. This one looks a little bit more bearish because we haven't broken above any of these highs. We're still holding, these lows. We haven't broken back above this structure. Even if price does sell off in these areas, I'm just going to wait for the next buys and continue that move. But we definitely need to back above these lows. We definitely need to break above these highs, because then that'll give us another liquidity sweep, break above, entry, gone. Then attack these highs. Same thing. Same play. And then for Bitcoin, we've been respecting the same setup for a minute now. Right in here, around 100,000. This is pretty much the new floor, and the reason why, I'm gonna go to the monthly. Right, we're on the monthly chart. We see that around 99, 100K, that's the previous all-time high right here. And it's also a psychological number, and this candle closes in about 2 days. So if we do close like this, then this will be the new floor, because we're closing above a previous high. The same reason, for all the other highs that we close above. We close above these highs here, so that became the new floor, essentially. And look how price came into this imbalance. Never got the full retest, but tried his best to balance the candle. And then this was the initial area. And look how price is gracefully chilled. Never even broke beneath these lows. So the whole time, people are trying to sell Bitcoin, not realizing on the monthly time frame, we haven't actually even violated any previous monthly lows. Right? Price just swept liquidity. So you got to zoom out and see, okay, are we actually closing beneath lows, or are we just sweeping and taking more liquidity? And then we eventually do break above highs. You can use the first one, the lowest one first. That counts as a break. This one here, that one there. Like you can use all these highs as breaks. They all count, right? This one here personally gave you the break and retest. This one too, super solid. Almost filled the imbalance here. This was an imbalance. Came back, almost retested. Right, all that. Clean setups, and then price flew. Several opportunities. No real excuses really, unless people just get caught up on the smaller time frames. Right? You gotta just always start on the monthly. I'm always looking at the monthly first. I don't care what it is. I don't care if I look at the same monthly candle every day. It does change. It does change. Again, here, this was another confirmation. This was a significant high, and we closed above. Boom. And if I mark up the low of that same candle, again, this is the entire buy zone here. You got to give yourself some room to breathe, because if you position yourself over the next, you had 10 weeks, 70 days to position yourself in these buys. So if Bitcoin flies, gone, you can't really blame anyone else. You have 10 days. You broke above previous highs. That confirms more bullishness, right? Higher high, higher low, higher high, higher low. Like that's an uptrend. We never closed beneath any previous weekly lows, monthly lows, none of that. We're holding above these highs. That's the new floor. Right? We closed above 100K. We also came and swept previous weekly lows. We swept liquidity. It's gearing up. This is all accumulation on the weekly chart. So that's why we've been in these buys here. If you look at the daily, we closed above these highs. Full body candle. Came back to retest multiple times. Never even swept these lows. We came close. I know the other day people were shook. But we never actually swept these lows. And now that we close back above these highs. Nice. Got another retest. Another one. Still closing above highs. You know, this next candle closes in 19 hours. If we close above this high, that's another confirmation. We close above these highs and, you know, just keep marking up monthly, weekly, daily highs and lows. Because once we break and close above those levels, that marks the completion of accumulation. So once we close above these highs, you know, somewhere on a smaller time frame, somewhere there was some type of accumulation and it's been completed because we made that break and close. And if we're sweeping previous lows and then continuing in the opposite direction, you know, price is doing its thing. It's doing its thing. Same thing with Ethereum as well. This is another one that we've been in for a minute. Let me see. Yeah, looking right here. Right, we never closed beneath these monthly lows. Came back. This is an imbalanced candle. Almost came back to give us the retest. Never fully got it, but we did sweep the previous month lows, and now we're still looking good. So as long as we close above here, I will continue to hold the ETH plays. If we end up closing full body candle, gotta just take that L. It is what it is. And we see here, even on this time frame, on the weekly, we're not closing beneath lows. We're holding, looking to close above some highs. I want to see us get above some highs, full body candles, at least. You know, I got to see some type of accumulation cooking up here. We just swept some lows. It's time to make that move. We'll see. If not, and it wants to go lower, then it is what it is. XRP as well, doing great. Closing above highs. Full body candles, filling in imbalances, sweeping previous lows. We need that close. Another confirmation. Gold as well. It's an old setup. This is an old setup here, sheesh. But look how clean this was. This is when I used to mark up with boxes. Used to use the box, same thing, right? The line, boom, sweep, break above. We got that beautiful retest, gone. This is from last February because I did change my chart, and I just recycle. I recycle all these every year. I have one for every month. And every month, I come back in here. I gotta change the name to 2025. I gotta go in here and just make a whole new one. I clear the chart, clear everything off of it, and just start again. But clearly in last year, I wasn't trading gold that much. After this trade, I was good. I was like, all right, bet. And you see this one played out. I didn't hold it this whole time, but if I would have, that's insane. Right? This is a clear example of how structure works. This is from February last year. Last year, still in profit. Still gone. So yeah, let me just clear this up because I'm going to start fresh on here. But yeah, that's gold. Gold is still playing out. We caught the moves. I'm not going to go too much in depth. I already went over it a lot. But yeah, same thing here. Imbalance fill, liquidity sweeps, breaking more highs. Yeah, super clean. What happened with silver? Sheesh. Same thing. Liquidity, sweep, break above, retest, gone. Easy plays. Just off the structure, higher time frame structure. Monthly structure. Find the structure on the monthly first, and then once price comes into that monthly structure, then you start dropping time frames. Right, same thing with the weekly. Find the weekly structure, the daily structure. Once price gets in there, then you go down to the 1 hour, 15 minute, whatever, and start looking for your setups. Oil, the trade I missed, but I'm still hoping for this because oil had me shook. We went up so crazy, but I see that we swept these highs, but we never closed above. And we also swept these highs. So it swept liquidity, but that thing reversed. So that's a sign of bearishness. And so instead of sweeping lows and continuing, we're sweeping highs and dropping off. So if we do end up closing beneath one of these lows here, that'll confirm lower prices. I'm hoping to catch oil in here. If I catch oil in here, this can be like a nasty play, like super nasty. But we'll see if it ever gets there. I'm gonna leave that on there actually. Euro USD still looks kind of cooked. You know, it's trying. It did break some structure here, giving us some more bullishness. If we're looking down here, we never got the full retest on the structure, so we still have some imbalance left. We did sweep, you know, some previous lows, but we haven't closed above any highs yet. So very slow with this. You got to just wait for that one. I know Forex pairs are a little bit slower. And technically, you know, this was an uptrend overall, right? If you would have drawn the fib from these lows to the highs, we are in the sniper zone. Like this is the 786, 886. Like this is a good area to be in for buys. Like if this area gets cooked, then this thing is gonna go negative type shit. But we'll see. Look how we broke this structure here. Nasty work. Just imagine the blue line being a floor, broke beneath, retested, sold, retested, sold. That just shows you the power of how strong, you know, just basic structure is. Oh, I gotta change this to black. Boom. There it is. You guys have any questions, any charts you want to look at? That's it for me on my end. Let me go back to NAS one last time. See what's popping. All right, so we'll see what happens during London session. Are we going to come back and retest these areas? I know we have some imbalances, massive imbalances on the 1 hour, 4 hour as well. I think it gapped up though. Did it? No. Yeah, we can easily get some of this being retested. We can retest here. We can retest here at this structure. Any one of these previous highs, we don't know. I'm just going to leave it alone until New York session tomorrow. And then between now and then, if we see another setup, I need you guys to look out for another setup. If you see it, send it in the chat. But since we're in this area, if we see another accumulation schematic, we can load more positions or just allow price to fall to lower buy zones. If you got the Fibonacci, you can wait for the discount. Whatever your trading plan is, I know people are different how they do things and approach the market. So whatever you do, just do that. But if you see the setup, let us know. Drop it in the chat. You know, like, yo, I see a setup. I'm about to get in. What do you guys think? I'm like, oh, bet. Let me set my buy limit. Let me get in there with ya. Let's make some bread together. I know we had a couple people make some money. I know Manny made some money. I know Andrew's up right now. I know Alexis, he made, well, you said like 500 or 800 bucks today, something like that. Chris, I'm sure Chris is in something. The boy Brandon, I know he was in. Marcus, he's in there. I don't know who he is. Marcus, he's in the New York session. I think he's in the wrong one. But yeah, it went crazy. It's going crazy.
I'm in UJ at the moment.
You're in UJ?
Yeah, I think it's down right now. I'll check it out.
Oh, I'm sorry, guys. I'm just now seeing the chat. Tevin, you said, could you give me an example of the two? Which two were you talking about? And then Alexa's discount price is, so on the Fibonacci, anything below 50% is discount. Right, so, you know, just think this is like $100 price. This, you know, this discount would be $50 price, and it's 50%. So what's 50% of 100? $50. So if this is $100 up here, you know, price goes up, it's 100, and then if it goes down 50%, that's $50. It's all good. I was talking about when to consider distribution over accumulation. Oh yeah. Wait, I'm still confused on that question, to be honest. When to consider. I maybe this can help. I know, for instance, let's say the market is uptrending overall, and then you see price giving you some accumulation. Oh yeah, when it's distribution, yeah. So that's, for instance, you get some accumulation first, boom, pops off, goes, and then you're making higher highs and higher lows. Boom. Doing its thing, and then let's say price just goes skyrocket, and then it starts to stop up there and give you some type of consolidation, and we sweep the highs, and then we break beneath the lows. So if we're looking for sells, same thing as the buys, but just in reverse. You mark up the lows that were broken beneath, mark up the highs that we swept above. Stop loss will always be at that highest wick. So when price comes back, you can enter that trade. Have your buy limit at the low that was broken, and then any other inefficiencies in between, have your buy limit or sell limits there. So when price does, it just automatically puts you in. Your stop loss is already set. So, if you walk away, whatever, you just boom, now you're in. Now you're in. Price sells off to let's say a previous accumulation, because every low that we see is accumulation. Every high that we see is distribution, right? But I'm just drawing it like one line, one dot. It looks like one dot, but this is how it actually looks. It looks like this. It looks like that, but it still has that one dot at the top, that one dot at the bottom, right? So when price does drop, I will see this in the market and won't take it. I'll see it. I'm okay, bet it's there. I'm going to wait, be patient, allow price to come maybe to a discount zone, right? Let's say you had the Fibonacci as well. You're like, oh, boom. I want to catch buys down here, right? I see that we broke structure as well, right? Have some buy limits here. We also have a lower entry, right? We actually broke structure here. We got some retests. So I like these areas for buys. Boom. It's next to the discount, which is 50% and below. Okay, cool. You saw price starts to make its way down. Boom. It's maybe approaching a trend line or whatever. It's not doing its thing. And then we see price respect. It hits your zone and just goes crazy. And then it breaks above a high. So okay, cool. You want to continue higher. But if I see price come back up here, most people are going to be like, oh, I want to sell here. We're coming back to the distribution. And you're right. You still want to sell that area because you haven't violated the stop loss. So technically this is still open. But for me, because we're in an uptrend, I'm not going to entertain the counter trend trades until honestly, I'm never going to do that. But if you are going to entertain that, you want to, if price does come back again, go ahead and enter the trade. If you want more confidence behind it, wait for more distribution again to give you another confirmation, right? And let's say that happens, boom, and we come back up again. We come back to retest the same area, the same trade from before. Give us that retest. Gives us more accumulation, takes off, and we get back to the sell zone again. But this time you see accumulation. I'm taking these buys because maybe these buys will break these highs. And then once that distribution gets broken above, now we just broke highs, right? We just broke highs. You marked it up. And now you're waiting for that retest of those highs. And this retest will fill the imbalance. Probably an imbalance broke out. It's retesting. Now the imbalance is filled. And then you're good to go. Boom. Right? Maybe after I make $1 million trading with the trend, then I'll start trading against the trend. I gotta make $1 million first with the trend. Right? I gotta get that down first. And then I'm like, okay, bet. Let me go against it. But bro, it's money to be made both ways. Like my boy Chris, he's a fucking beast at counter trend trading. He loves taking his sells, right? But he takes very low risk sells. He'll take it after we sweep like a monthly, a weekly, or a daily previous high, right? Like as you see here, this was a nasty entry. We had these highs here. We swept it, and then price dropped over 1,000 points. Entry could have been right at the sweep. Nasty work. But then you see here, you know, that didn't happen. Like we broke above these highs. So it's kind of play it by ear. But if you see that it's kind of weak and it's only giving you wicks and it keeps retesting that area, you know, easily take that. Stop loss would be above the most recent highs that it made. So you could have had a 50 or a 60 point stop loss, and then you could have made, you know, 1,200. That's an insane risk to reward. Insane. So if I were to counter trend trade ever, I would literally trade at the lowest risk possible areas, which would be the sweeps of liquidity. That's it. If it's not that, I'm not going to do it. It's too risky. Even if I do see distribution, I'm cool. But that's just me. Everyone is different. I know plenty of people who only counter trend trade and they make stupid bread. So you never know. You never know. But yeah, you guys have any questions, comments, concerns, complaints, suggestions? Any charts as well? Yeah, it definitely does. Definitely. 100%. 100%. Thank you. Yes, sir. Super clean. Let me save this real quick.